Start your day with It's the Business. Here's Phil Dobbie.
Good morning. Today, what's the buzz on edge computing and how does it relate to the cloud? James Bourne, editor-in-chief at TechForge Media, joins us today to explain it all.
All of these emerging technologies, they work together in concert. So you can either see them as working together in concert or as kind of a virtuous circle, if you will. So yeah, mobile, artificial intelligence, all powered by cloud. You've got 5G in there as well. They all make each other better. The edge paradigm has kind of come through, and all these other technologies are influencing it and helping it as well.
So we've got the cloud, the edge, we've got mist computing, we've got fog computing. We have more jargon than you can poke a stick at today. Plus, Bitcoin. Did it come of age yesterday as Coinbase listed on the NASDAQ?
I think, hopefully Coinbase going public and having its direct listing is going to be viewed as kind of a landmark moment for the crypto space where, hey, this technology is here to stay. It's creating a ton of value in the world.
Does this listing legitimize cryptocurrencies? Because now at least you can trade on the value of the platforms that enable you to trade in the coins. But will Coinbase become the de facto proxy for Bitcoin on the stock markets? If so, it didn't get off to a terrific start yesterday. It's Thursday, the 15th of April, 2021. Good morning.
And now it's the business, making sense of it all with Phil Dobbie.
So did Bitcoin come of age yesterday? Coinbase, which is a cryptocurrency trading platform listed on the NASDAQ. So this is quite a thing. I still don't get Bitcoin, though, I have to say. I mean, it's doubled in value since February. What's it going to do? Keep on going up? And if everyone thought that, wouldn't everyone pile in? And would it go on up forever, even though intrinsically it's not linked to anything of value? I mean, the only value it has is that it's a scarce resource, even though it doesn't exist in the real world. At least with gold, if you wanted to, if you had it, you could melt it down and make a bracelet out of it, or a toilet, a gold toilet. Was it Donald Trump who had a gold toilet? Someone's got a gold toilet. At least that's something solid, isn't it? Bitcoin doesn't exist in the real world, just in the online world. But now traditional investors are obviously interested in it because they are investing in a platform that facilitates trades in Bitcoin. So this is one step removed from Bitcoin and other cryptocurrencies. The New York Times yesterday said Coinbase's public listing is a cryptocurrency coming out party, which it may be, but it's one step removed from Bitcoin because you're investing in the trading platform, not the currency. And of course, trading platforms can do well as long as people trade. They tend to clip the tickets as currencies go up, and then they can clip them again as they come down, and everyone's trying to buy their way out. But it listed yesterday with a valuation that rivaled Airbnb and Facebook on their debuts, with a value of around $100 billion US. And look, it's not just Bitcoin. It also trades in lesser known coins like Ether, Dash, Litecoin, Mana, Stellar, Sushi Swap. This is a completely different world to me. I just don't get it at all. So is trading in Coinbase, this is the question, is it going to be a proxy for the value of cryptocurrencies, in particular in Bitcoin? Does that mean that cryptocurrencies, if they keep on rising to ridiculous levels, if we were to see that happening, then is the NASDAQ going to keep rising as well? Because Coinbase is going to keep rising. Or could it work the other way around? If equity investors flee from Coinbase, could cryptocurrency investors lose confidence and flee from Bitcoin? But of course, if they did that, then, there'd be heavier trading. It would push up the value of Coinbase. It's all a little confusing, isn't it? Here's Coinbase's CEO and co-founder, Brian Armstrong, talking on CNBC just ahead of the listing on the NASDAQ yesterday.
I do think that, Coinbase has hopefully helped the industry move forward and help bring the future, in sooner, so it happens sooner. And that we've done that with legitimizing crypto, following a trusted and regulated approach, hopefully making it even easier to use in some ways. And, by the way, it's not just us. There's a whole industry with a lot of amazing companies building and growing this space. That's why we call it the crypto economy. It truly is a new economy. It has now, hundreds and thousands of companies being created in this space. So I think, hopefully Coinbase going public and having its direct listing is going to be viewed as kind of a landmark moment for the crypto space where, hey, this technology is here to stay. It's creating a ton of value in the world. People no longer need to be scared of it like in the early days, and they were concerned about all these things. Now there's so many legitimate use cases, and this is a regulated financial service business. I think the focus is going to be more in the future about how can we really leverage this opportunity to create more jobs, more economic growth, more economic freedom for people in every country in the world that embraces this.
Yeah. He's bound to say that. He's the CEO. I just don't get it. How can cryptocurrency, which can't be spent in any meaningful way, create jobs? I mean, it pushes up the income of those people who invested early in it because the prices are going up. But the prices can't keep rising, because if they did, everyone would pile in, everyone would get richer, and that would push prices up. And so you would get inflation, basically. But before that happens, obviously, you would see people heading out of it, and people would pile out because they saw what was coming. But it's the interplay between that and the Coinbase listing on the stock exchange, which is going to be the interesting one to watch. Who knows how this is going to play out? But so far, yesterday afternoon, Coinbase fell 17%. The NASDAQ fell. It dragged the NASDAQ down about 0.8%. So Coinbase has basically pulled the NASDAQ down and then some. And it's fallen a bit more than that. And at the same time, Bitcoin lost over 2% as well. So will the NASDAQ influence the Coinbase share price? Sure it will. So will other factors that influence the stock exchange, like currency values. There's the ironic thing. Existing currencies could indirectly be impacting the value of cryptocurrencies through this new connection they've got on the stock exchange. Obviously, bond prices, stuff like that, all the things that interplay to influence the share market. Could they influence the Coinbase share price? Sure they can. And will the Coinbase share price influence Bitcoin? I mean, the Bitcoin community has been talking about the legitimacy that comes with being recognized on established marketplaces like NASDAQ. But will they live to regret it? Will market forces play down the continual talking up of the Bitcoin community? This is going to be an interesting one to watch, isn't it? The New York Times says it's their coming out party. I wonder, in fact, whether yesterday was their day of reckoning. It's going to be interesting to see how day 2 goes later on this morning. Now, in the latest ONS, Office of National Statistics data, 42% of us worked from home last week. As a proportion of those of us with a job, that is. Now, we do know many companies have downsized their headquarters to prepare for the future where people work from the office less, perhaps only a couple of days a week, and more time at home. So how have companies coped with the infrastructure to facilitate all of this? And what are the long-term consequences if we work from home more over the public internet or on mobile phone networks when it comes to security and reliability and efficiency? How are we going to cope with all of those? Well, let's talk to James Bourne. He is the editor-in-chief at TechForge Media, who publish a range of technology business titles. Let's look at this move to the cloud, first of all, James. What is it that people are doing in the cloud that we weren't doing before? Because, of course, we were operating a lot in the cloud, businesses of all sizes, whether it was holding meetings, sharing documents, and all these sort of working together stuff that the cloud is so good at.
I mean, yeah, it's much more. If you look at someone like Amazon Web Services, obviously the leader in cloud infrastructure and their full list of products, it's more than 200 by this stage. It's almost the breadth of what you would consider a cloud service. I mean, so machine learning, for instance, is a good subset of this. You've got things like language translation, image analysis, speech recognition and transcription. A product called Amazon Lex, which is using conversation interfaces using voice and text. I mean, that's a great example because that's basically the technology that Amazon uses for Alexa. But that's been ripped out, repackaged, and sold as a service to businesses. And machine learning is a great example of this because the ability to scale up your cloud workloads as you go along, and also the fact that the price of storage and compute has gone down significantly means that companies can experiment much more easily. It's so much more accessible because the cloud providers have so much data. Their systems can learn from it and can become better as well. I mean, a good example of that is sporting bodies and franchises. AWS has a lot of those customers. So companies like, Formula One, NASCAR, the Bundesliga in Germany. A lot of what they do on Amazon's cloud is to use services like the ones I've mentioned, to things like digitizing and storing their archive, but also annotating the metadata, making it much easier to search and to use.
Right. Which is all stuff that they wouldn't have been able to do quite so easily themselves, I guess. I mean, first of all,
exactly.
Yeah.
Yeah.
I mean, the beginning part is having all that stuff in one place, isn't it? I mean, if you're putting it in the cloud, at least it is in one place. Before we had the cloud, it was all sitting on servers all over the place, probably.
Yeah, exactly. And that's part of the journey. You know, the journey is to, first of all, get all of this stuff, migrate it. I mean, you know, you'd imagine some of these archives, a lot of it would just be on very old, very dusty tapes somewhere.
Yeah.
So part of that is to, you know, that's the migration journey. And then you can build on top of it and do loads of cool things afterwards. So that's how I'd say part of the reason how the cloud has evolved. Right. In recent times.
And a lot of these, so I mean, the cool things that you're talking about are a bit like apps that we have on our mobile phone, really, aren't they? Where, you know, the smarts is actually sitting in the network or sitting on a server somewhere else, not sitting on our phone. And they're new things that we weren't able to do. So, I mean, a classic example is Office 365 from Microsoft. Now you can transcript audio. I mean, it takes a while to do. It's not entirely accurate, but it's something that you weren't able to do before. And actually, for me, that is a big leap forward.
Yeah, and I think a lot of it at the moment is you've got to accept that good is better than perfect. It's the convenience trade-off. Yeah. And as I mentioned with the machine learning side, I mean, I use transcription services as well for my job. And, you know, it doesn't get it right all the time, but you can see it is gradually improving the more that I use it. So that's an interesting to look at as well. But yeah, it's more the trade-off between convenience more than anything else.
So does that mean that people are, you know, you're saying how Amazon broke apart stuff that they had so that they could offer it as new services. So does that mean that businesses are having to do less of developing stuff themselves because there's stuff that's almost certainly going to be something close to what they want that they can somehow bolt together that's sitting in the cloud? So this idea of, you know, let's get developers in, let's build a big bit of software, you know, like, for example, in telecommunications, I worked there for a while and, you know, it seemed like half the money that the company made went into building the next billing system. You know, are we thinking now more about let's chunk stuff up and take apps or, you know, services that already exist in the cloud and use them and just concentrate on how we bolt them together? Is that the way it's working?
Yeah, I mean, taking the off-the-shelf stuff. I mean, a great example of that, I wrote a story last week on Spotify, who is a well-known customer of Google Cloud. They released a podcast, and that included a few quite frank admissions into some of the mistakes that they made. And one of them was a company like Spotify. They said they have a very strong engineering culture. So previously, their attitude to certain things, we've got a problem on this, what do we do? Oh, let's build something because we have really good engineers. But then they realized that, you know, the investment in the cloud migration process, it's not just you're spending all this money to rent their storage space. I mean, if you look at certain reports, Flexera's State of the Cloud benchmark report, you know, 1 in 3 enterprises is spending 7 figures a month on these cloud providers with these cloud providers. So you're not just investing in the renting of the storage space, you're also investing in their team, which is obviously a great security team, but also a fantastic development team as well. And Spotify realized it's better to almost outsource that, if you will. They said it's a sign of a mature and seasoned product management team to know what to build and to know what to outsource, as it were, instead of just doing everything and wasting time as they thought on that.
Right. So there's an admission. So they weren't mature and seasoned before, is what they were saying. Well, a young company, I guess they can say that.
Exactly.
So what about the reliability of these things, though? So if Amazon Cloud Services, I know it hardly ever goes down, but if it does go down, half the web goes down with it, doesn't it? And if you're a business that is reliant on an application that's sitting in the cloud, maybe it is routing calls, for example, for your call center and doing smarts around that. If these things go down, your business is crushed.
Yeah, that is a trade-off, and that is a fair point. But I think you mentioned it yourself in the question. You know, it hardly ever goes down, but when it does, so I guess, you know, these cloud companies all strive for traditionally the 5 nines service level agreement, 99.999%. But you're right. You look at something like Cloudflare, which does power so much of the internet. When that has an off day, then so many businesses struggle. But, you know, in terms of the reliability and the security side of things, you know, one of the big issues that has always been, you know, I've been reporting on cloud technologies for a decade, and one of the big issues has always been around the concept of shared responsibility and who is responsible for what. And so ultimately, the the cloud provider, your Amazons, Microsoft, Google's et al., are responsible for the security of the cloud, which is, the underlying infrastructure. And so you obviously you see some things that happen there when it goes down, and it is the cloud provider's fault. I mean, weather can play a part in that. I think you may have seen last month, OVH, they had a pretty disastrous data center fire in Strasbourg. Thankfully, nobody was hurt, but of course, businesses lost their data. So that was an example of security of the cloud. Whereas the customer is responsible for the security in the cloud, which is the applications and the data, etc. So in terms of that security side, I know it's not quite reliability, but in terms of security, many of the stories that I write around these breaches are usually because of an error on the customer side rather than the vendor side, which is, certain things like misaligned permissions in their cloud instances, which basically means, an otherwise confidential file is publicly available. It's like going out for the evening and leaving your front door wide open, and then you've come back and found somebody's stolen your TV. So it's that sort of thing that usually is more of an issue for companies, and the vendors,
which is user error, isn't it? Really, ultimately, it's well, I don't know how you solve that, because it is obviously it is complicated, the whole thing. You just learn from experience, I guess, and measures are put in place to try and stop that thing happening. What about though when you start looking at people working from home? Because I imagine the biggest single point of failure is actually going to be the home internet connection. Yeah, no, that's interesting. I mean, when I spoke to cloud companies, I mean, particularly during the first lockdown, or this time last year, they all said to me that, the first thing I asked them was, how's business? And they said, great, we can't keep up. But the one thing they said is that people are very, very good at building things out, but they're not so good at cleaning up after themselves. So, I mean, I guess the reliability is, with regard to your point about the home internet connection, then yes, I do agree with that. It's beholden, because I guess there's a debate to be had over, whether these home internets can cope with work orientated systems we have to do for work, and whether organizations should invest in companies in employees' home internet, whether there should be a trade-off in terms of how often they go to the office, etc. So I mean, I guess there can be reliability. Well, getting that faster rollout of full fiber would be a big help here, wouldn't it? So we're not reliant on a copper wire. So we get the speeds and we get more reliability. So you don't have the speed suddenly dropping whenever it rains, which can happen on copper networks. So if we're going to go down this road, this is surely a case that, I don't know whether it's government policy or whether OpenReach just needs to lift their game, but we just need to see it happen faster, don't we?
Yeah, no, I do agree with that. I think obviously the telecom side is more your specialty. So I'll bow down to you on that one. But I do agree with that in principle. Certainly.
So tell me about edge computing then, because this has got me curious. And what's the difference between edge computing and cloud computing? I'm seeing this term a great deal, and why has that risen so much during the pandemic?
Yeah, certainly. I mean, so the best way to think of edge computing compared to cloud is, cloud computing is essentially somebody else's data center, as we've already mentioned. You are renting storage compute space from Amazon, Microsoft, Google, et al. Edge computing is essentially something which is outside of the traditional data center, or a mini data center, if you will. It's literally computing which is done at or near the source of data, rather than having to send data from, say, a warehouse or an oil rig or a manufacturing plant to the cloud. So the two basic benefits of edge computing are lower latency, which is quicker response and computations, and greater accessibility. I mean, a good example on the latency side is, for instance, if you have a quality control on a manufacturing line, a robotic arm, which will, say whatever item's going along, the robotic arm will assess each item and then go down and pick up all the bad ones. You want that line obviously to go as quickly as possible, and it would be better if you were able to do that locally rather than have the image then take that data all the way to the cloud, analyze it, and then go back. I mean, I'm not talking huge numbers here. I'm only talking a couple of seconds if that were analyzed in the cloud.
Yeah.
But if you want the line to go as fast as possible, then that's a factor.
And so they're like mini data centers or processing centers, which are closer to the action. In other words, is what you're saying, isn't it? So, yes. And do they tend to be owned then by companies themselves, or are the Amazons of this world trying to say, well, okay, let's try and provide the next layer down. Let's get into edge computing as well.
They're not there yet. Although the one thing that I would say that is quite interesting is, looking at the telecom side of things, the cloud providers, the Amazons, Microsoft of this world, are partnering with telcos around edge computing, around 5G as well. Sort of that's where the telcos and the network side of things, that is where the telcos have sway at the moment. I think Amazon has a partnership in place with Verizon for that very instance. Microsoft bought a couple of companies last year, MetaSwitch, Affirm Networks, to cover this kind of space, really. Because what both sides want is they want developers who are building these new super fast, super cool 5G applications. And, the cloud providers have the infrastructure capability. And as we mentioned before, the machine learning and artificial intelligence capability. The telcos have the 5G and the network side of things. And so it makes sense for them, for the two sides to sort of partner up when we're talking about this new edge paradigm, if you will.
And this and mobile devices and artificial intelligence. I mean, because mobile devices do create so much customer information, don't they? If we're looking at, B2C type businesses, I can see that, the potential for artificial intelligence there is huge, isn't it? Yeah,
absolutely. And the way I see it is that all of these emerging technologies, they work together in concert. So you can either see them as working together in concert or as kind of a virtuous circle, if you will. So mobile, artificial intelligence, all powered by cloud. You've got 5G in there as well. They all make each other better. And as the edge paradigm has kind of come through, and all these other technologies are influencing it and helping it as well. So
years ago, somebody from Cisco talked about, rather than cloud computing, I think he used the term mist. And he was talking about how, you have lots of connections between devices that are in close proximity, so that they need information from each other. They don't need to go up to the cloud and back down again. So I guess in effect, when he was talking about mist, that's really edge computing, isn't it?
Yeah, I mean, to be honest, I had to look up the term mist. If I'm going to be a weatherman for a few minutes,
it might be one person who in Cisco who just came up with the phrase. He used it with me. It didn't really work and disappeared. So I don't know as it came common terminology, but the gist of it is the same, isn't it? And his point was, if we get to his example was, if we have self-drive cars, they're going to need to talk to each other, and some information will need to go up to the cloud and some of it back down again. But most of it actually is going to be real-time information, which, as you said, has to be low latency, because you don't want to wait a couple of seconds before your car decides it's going to turn left.
Well, yeah, exactly. There is a long-standing joke in the industry around edge computing, which essentially says, if you are driving a self-driving car and, a deer comes out, suddenly in the road, if that information has to go to the cloud, then you're having venison for dinner. It's not gonna. Artificial
intelligence will send your device a recipe for venison, presumably as well.
Yes, exactly, and give you recommendations.
Machine learning world.
Yeah, I mean, so just to sort of clarify, I think we have the concept of cloud. Obviously, we had this thing called fog computing, which I think again was coined by Cisco, as you mentioned.
Oh, so maybe it was fog then, rather than mist. I might have got it wrong. Yeah,
no, it's separate things. I did look this up last night. So cloud is what we've talked about. Fog is basically now what we've described as edge was basically the idea around fog, and then you had mist, which was even more extreme example of edge. I think, to be really pedantic, fog referred to things like nodes and gateways and small servers, whereas mist was the devices itself, so maybe like a car or smart TVs and appliances. But you're right, it's all part of the edge conversation, really.
So how are companies able to invest in all of this when they have been struggling during lockdown? I guess lots of companies haven't been struggling, and that's the answer to that, isn't it? But are we seeing massive investment in infrastructure from companies as they say, well, we need to work differently from now on? Has it actually speeded up perhaps things that were already in the pipeline but have been brought forward?
Yeah, I think it's a mix of everything, really. Companies, the COVID-19 has given companies a kick up the backside, really, whether they wanted to or not. Companies that were on a journey were able to accelerate. Companies that weren't on a journey as well had to do something, even whether it was just, here's a laptop, here's a code, here you go. Have fun. And I mean, there are some things as well that, companies, employees, don't really help themselves. I mean, I guess the point that I wanted to make here is, the cloud is no more or no less secure than on-premises security. But I think there was a study from Ivanti. I mean, they're a cybersecurity provider, so they're a bit of a vested interest. But they did find that I think 30% of remote workers polled, US and UK, said their organizations didn't require them to use a secure access tool like a VPN to log into corporate databases and systems. So I suppose you can infer from that, really, how much, a real sort of investment, a real plan has been made rather than something that's been kind of cobbled together. But I do think that in many cases, companies have not had a choice, really, particularly with the first lockdown. So I'm sure plenty of companies out there just wouldn't have been able to function otherwise. They had to just put something together ASAP.
So they are just running web interfaces basically for their applications, and people are logging in and exchanging passwords and all that sort of stuff over the open internet in lots of cases.
Not ideal. Yeah.
Not ideal, is it? So, hopefully they'll play catch up in that case. But I mean, that does beg the question about, how companies are coping generally with this idea that some people are sitting at home, apps that have been sitting on a server somewhere, not sitting on their PC, now need to be accessed by their PC. I guess, they need, and lots of people have got used to the idea that they've got virtual desktops, so they can log in on a computer at home and log in on a computer at work, and it's exactly the same thing. But that can be very slow, can't it? Because, the grunt work is being done again on a server. Maybe now it'll be done using edge technology, but that is still slower for a lot of common applications than just having it sitting on the hard drive on your PC, isn't it?
Yes, I do agree with that. I think, again, as I referred to earlier, it's the battle between perfect and good enough. And I do think it'll be interesting as things go on, because, of course, we settled for this because we had to, really. We had no other choice. And it'll be interesting to, I guess, assess going forward what the expectations will be when we go back to a hybrid thing. It is interesting to note that, Amazon and Microsoft, their sales of their virtual desktop offerings, went up significantly. And there has been investment in this, but as I say, it's, there is latency, as you said. It can be a little bit slow at times, but it maybe we go back to the broadband debate as to how we can beef that up a little.
Yeah, absolutely. And do you think, final question then, in your view, I mean, do you think it is here to stay, this hybrid working model? Do you think the industry is gearing up on the basis that it is, or do you think we might actually slowly drift back? The reason I ask that question is I've got a few friends in Australia. I do some work for an Australian company, and of course they haven't had COVID-19 anywhere near as bad as we have. And everyone was talking about a hybrid model there, but it seems like everyone is just drifting back into the office. So we may be surprised that things just go back to, we make all this investment and then things go back to how they were.
Well, that's very interesting, because the company that I was going to mention was Salesforce, who said this week that it was doing a phased reopening with, I think, fully vaccinated employees were able to come back in. And they used Sydney as an example of that, obviously, where, as you mentioned, they've not had COVID anywhere near as bad. So they've been able to do that. I do think every bit of research, every informal Twitter poll, LinkedIn poll that I've seen, from an employee perspective, everyone wants a hybrid experience, don't they? And it would, I suppose, surprise me to, as you say, all this investment that's taken place that's suddenly just going to be ignored and we're going to go back to normal again. I do think it's interesting to assess the tech companies and where they're going. I believe Twitter and Facebook have gone with a work remotely indefinitely policy, I think. Yes. Google has demurred to September to reopen. I've obviously mentioned the example with Salesforce. So, I think we will have a hybrid, but it's
got to find its level, hasn't it? Yes. And it is going to be different for different companies. Well, we're on a journey, aren't we? And that's all we can say at this stage, and we don't know where we're going to end up. Look, James, it's been great having you on. I hope we can get you on again fairly soon to talk more about this area. Fascinating stuff. Thanks for your time this morning.
No worries. Appreciate you inviting me, Phil.
And before we go, a few different stories dominating the headlines in the newspapers this morning. The Daily Mirror leads with the axing of British gas engineers. This is basically the ones who refused new deals, and those new deals were effectively pay cuts. So if you didn't take the pay cut, well, you can basically shove your job. British gas disgrace is the Mirror headline this morning. Lots of papers covering the lobbying scandal, as you might imagine. I just think this Greens Hill thing, this mess is only going to get messier. But the sleaze is back, says the Metro. This is because Boris Johnson has refused a wider cross-party inquiry into this lobbying scandal. Instead, there's going to be a probe by the lawyer, Nigel Bourne. I think he's going to handily offer a report to Boris, and then he can choose what he wants to do with it. He can sit on it, or he can use bits of it, like maybe the bits that have a go at Rishi Sunak. If there's something in there that he can stick on Rishi, then maybe he will, given that he is the most likely contender for Boris's job. The Daily Telegraph, no, he wouldn't do that, would he? No. The Daily Telegraph says, crackdown on Mandarins' second jobs. Never quite understood why they call civil servants Mandarins. Anyway, the civil service chief orders senior staff to declare controversial private roles in the wake of the Greens Hill row. This is after Bill Crothers was head of Whitehall procurement, in control of a £15 billion annual purchasing budget. Yep, 15 billion, when he took on an external role as part-time advisor to Greens Hill's board in September 2015. There is something very smelly about all of this, isn't there? And then the Eye says a senior member of the committee to investigate lobbying is, guess what? Someone who has a second job running a lobbying firm that operates in Houses of Parliament. You couldn't make it up, could you? And then another angle from the Daily Mail. PM lobbied by Saudi prince. Boris acted on personal plea from bin Salman over the Axe £300 million football club deal. So there we are. Is it any surprise to you that the world is basically run on the basis of a bunch of mates doing deals with each other? Does any of that surprise you? That's it for today. Hopefully we will make it through today without getting banned on YouTube. There was something yesterday that apparently upset YouTube, and they took us down until we could actually point out that what they thought we'd said, we probably hadn't said. They thought we were telling people yesterday not to take the jab, when all we were actually saying was, are we going to have more surveillance as a result of all of this? Completely different thing. I don't know. I need to listen more closely. But clearly, our new editor-in-chief is Google. Let's see what they think of today's episode. See you again tomorrow morning. Have a great day.
It's the Business with Phil Dobbie. Listen online at itsthe.business or wherever good podcasts are found.